Good morning, everybody. Welcome to another day of Market Report brought to you by Mike Bjork. Today is Monday, March 9th. I hope you guys had a wonderful weekend. Nothing on the docket today in terms of economic calendar. We will, starting tomorrow, having a few more. As the week picks up, we'll have a little bit more news later in the week. But today, the stock market's up. A lot of it is due to reports going out there, Apple setting a tone right there. Also, the ECB, the European Central Bank, started their quantitative easing today. Now, they're doing about 65 billion per month, and they're going to go up to about roughly 25, approximately $1 trillion is kind of what they're allocating towards there. Now, the good news behind that is that's because they're buying those, purchasing those, it's devaluing their prices over there. Like the Bund is under 1%. You got a few other ones like Spain and Italy are just above like 1.25% in that range. But the U.S. is over 2%. So a lot of investors are going to be flocking to the U.S. here. So take a look here. We see a little bit of a spike we had today regards to the Fannie Mae coupon here where it jumped up. That means we're getting better pricing. We're going to create a little bit more demand here, so I expect to see better pricing down the terms after Europe had started their kind of easing, as we have a lot better yields compared to what they are. And of course, we're very safe. We've never defaulted on any of our loans. Plus, you still have the concern about Greece over there, where they just prolonged it for 4 months, and they're trying to figure out a plan that would work for both sides as they try to work through those issues. So they still haven't worked out. All they are is just deferring those issues and haven't come to a resolution as of yet. But right now we got a little bit of an improvement here in interest rates, and we could see some further improvement. We may get a lot of those, the losses we had, we may get those back here probably over next course of the next month or so. It takes a little bit of time. We'll have little ups and downs here. We're starting to get to the reality. Investors are starting to get the reality with the good jobs numbers we had last week. That the U.S. is actually on the verge that they might be hiking rates. Sooner than later type of thing. So June's FOMC meeting is going to be extremely important, as it will give them more indication as to that was the first thought when they might start raising rates. But we'll have to kind of wait and see if that would be the case, because obviously one of the things that the Fed has also made notion was they want to make sure that we are a good solid foundation in regards to inflation, that we don't go to deflation. They don't want to obviously risk going to deflation, which would be a worse situation for us. So to combat that, they may keep it down a little bit longer, the rates a little bit longer than we expect. Probably want to see some improvement in the inflation department, because they'd like to get that goal of 2% year over year, showing that we got some growth here versus decay. And if you watched the recording last Friday, there was a study that I saw that 60% of wage earners are actually making less than what today in 2014 made less than what they were making in 2007. So that talks about the deflation we've been kind of seeing, especially on the wage earners here. All right, folks, thanks so much for watching. I hope you guys have a wonderful day. We'll look forward to seeing you guys tomorrow. Take care.